So today we're talking on bias storyline. Okay, bias is also storyline. Okay, how to build storyline, how to build our bias. All right. So what we'll be doing differently here is a little kind of a focus to where price is going, where I'll be talking about expansion and retracement move. Okay, the last video I posted, I explained that, so visit that video and watch more on expansion and retracement so you get to know what I'm about to explain here. Now let's say the monthly, look at the monthly time frame. This is the USD CHF, so I'll be quick on this. So this is the USD CHF. Now you see that price tapped to this key level here, to this A-shaped key level. All right. Now, and also there is a sweep here. There's a sweep here, right? So let me, and this CRT, okay? So this kind of CRT and key level being combined. This is the key level, and this is the CRT. So they are correlating. Now this candle higher has been taken. Price should come what? Take the low. Okay. Now in this market, you'll be expecting what? Sell, sell, sell. But I want to tell you that it's not really that way. You understand? It's not really that way. You have to follow, you have to let all the time frame align before you start selling. And in this sell market now, you can also consider buying. All right, so let's go to the weekly time frame. Let's see. Now weekly time frame is what? It's still showing sales. Okay, still showing sales on the weekly time frame. Now we had that this week high is taking, so price should come and take this week low. Yeah, all right, price has taken it, but that's not our target. See our target here from the monthly. Okay, and you see that the target has not been hit and price is kind of giving a bullish movement. Okay, now you can go to daily time frame. You have to wait for all the time frames to align before you do what? You keep selling. All right, now when you go to the daily time frame, we saw this. This candle low was taking the high here. Price should come for the high, right? Now sometimes when, let me say, when price was here, when price was kind of around here, maybe this candle, price might decide to sweep this one, to sweep this candle here, to sweep this one and keep selling to this place. Okay, but you wouldn't know that this is what price will do. But if price will come to this place, and you won't also know. But there are some criterias that this is where your entry model comes in, and how the candle closed. Now this candle here closed what? Closed bullish above this one. All right, so this is where we now bring in our entry model to know that whether price is giving us signal or that we are going to come up here. Okay, or we're going to ride up here to take out this high. This high is our drawn liquidity, so that means after this high is taken, anything can happen. Price can keep going up or still come down and respect what the monthly candle trend, all right, which is coming down. Monthly CRT, which is coming down. Do you get? Now how do we get in on this trade? So mind you, this is a downtrend, but we are doing what? Considering a buy based on the daily candle sweep. All right, daily candle sweep. So on the weekly, we can see that this is an A-shaped key level, so you can also expect some pullback there and price sell from that A-shaped key level. Okay, so but this high now is our primary target. This high now is our primary target. So let's know whether we can ride this. Now what I trade is this key level. Okay, Okay, SLK. So what I do is I start tracing my movement from where it happening, from where it started happening. That's where I start tracing my movement. All right. So now let me go. I can see that I have an inducement here. I have an inducement here, and this my inducement that are internal range. This is an internal range liquidity. All right. So price tap to a key level. Let me check the key level it tap to on the 3 hours. It tap to this open close. It tap to this open close, right? And what bought off. Okay. So this like a first entry buying from here. But one thing is I don't take risky entries. I take confirmation entry. Like this first one, I don't usually take it. Alright, that's why my win rate is kind of high, because I take confirmations, confirmation entry. This first one I don't take it, but I consider it as my first entry, because if the first entry should hold, the risky entry should hold, then probably the second entry, which is a confirmation entry, will hold also. So these are first entry. Let me go to 2 hours. Now we have another this is my internal range here. All these lows are internal range. So this is the key level I'm expecting price to come play with. So when price came to that key level, let me go to 1 hour. When price came to that key level, if I'm not sure, okay, my stop loss should be here. If I'm not sure that price we buy from there, I will still wait for another confirmation entry. How do I wait? I wait for price to tap to that key level. All right. These are my internal range. I like to mark it out. I wait for price to tap to the key level and reject. And once price has reject, I will now wait for price to form. Since this is a buy, I wait for price to form a V-shaped key level. I wait for price to form a V-shaped key level with an inducement, single candle inducement. All right. I wait for price to form. Okay. Now you can see that price printed what? An inducement, printed um printed a V-shaped key level here. This is the key level, and the inducement candle is here. Can you see how beautiful this is? Alright, that's a V-shape, right? So V-shape key levels are used for buys. I made a video on that. Check my previous videos. Okay, so you can enter from here. So how many entries do we have here? More like how many? 3, almost 8 entries. If you are taking both the risky entry and the confirmation entry. Now, where is our target? Our target is that daily high. All right. So anytime you want to enter a trade, start tracing the market from where it started buying. Don't just open the chart and start trying to spot out your entry model. Combine both when market started buying, from where it started buying. Start marking your entry model from where it started to buy or to sell. Okay. Then you now know whether you are taking from a risky entry or a risky POI or a confirmation POI. So, but combining both risky and confirmation entry, we had like three setups, which is about like how many R are here? These are around 7 R. These are around 7 R. 8, almost 9 R. 9 R, that is 16 R. Then 5, that is 21 R. 21 hour on that's in a day. This is a day candle, right? Let's check. Or 2 days. Yeah, that's a day. That's 2 days. Yes, you're having 21 hour. That's crazy, man. That's like if I risk 1%, that is like 21%. So this is it, bro. This is it. This is it, my guy. This is it. This is it. So that'll be all for this video. That'll be all. See you in the next. See you in the next